the US30 Masters course. So we'll be covering today the introduction of the time precision trading. Thank you. So if you've come this far, thank you so much for watching. I hope that you will do all the lessons of the course and you'll gain tremendous understanding of the time precision trading strategy to a point where you'll become a profitable trader. I have many testimonies that I've seen of students that have done this course and they've done so well. And I know that if you just watch on my left, this side, you're just gonna see how people have been profitable throughout the years, how people have been making profits, how people have grown in understanding the market, understanding time, how time is so crucial and important in the market. So yeah, just watch, just read there, just a little bit on the side, and you're just gonna see how time precision trading has been an impact in many people's lives to become profitable traders. Yes. So yes, without any waste of time, we're gonna start with the introduction of time and forex trading. So this is a link that many people don't really take that serious. So people don't really understand that it's a very powerful link. Like it's a strong link, because each and every candlestick, you see that each and every candlestick has a time on it. So if you open your chart and you look at each and every candlestick, maybe on a 1 hour time frame, you're gonna see that each candlestick represents a particular hour, a particular time of when that candlestick opened and when it closed. It has an opening time and it also has a closing time. So it's very important to understand, okay, so if each and every candlestick has a time to it, has a time allocated to it, meaning there is a specific time that it opened and there's a specific time that it closed. It has a specific time that it bought for a period and there's a specific time that it sold for a period. So if time is that crucial to trading, that it can't move without time, because if we take away the time in trading, there is no candlestick that's gonna form, because each and every candlestick that forms is dependent on time. So why then do we know all the strategies? We know them all. We know all about the uptrend. We know about the wedges. We know about the M formation. We know about the W formation. There's so many patterns that we know about, but do we ever think that all those patterns happen at a specific time and they will end at a specific time? So if time plays a crucial thing in trading, why don't we learn trading based on time? And we know the saying that time is more important than money.
The entire money world is people think that time is money. We hear that from when we're a little kid. Money is time, time is money. But time is actually not money at all. In fact, with money, you can always go out and make more money. You can get a part-time job, you can start a side hustle, but your time, you never get back your time. You know, this moment is really all there is. And so
time is money, time is money, time is money. I submit to you that time is not money. Time is infinitely more valuable than money. If you believe that time is money, it's going to cause you to make a bunch of mistakes. First mistake, believing time is money, is going to cost you, is going to cause you to waste a whole lot of time trying to save a little bit of money. And
time is quite the leading factor when it regards money. And what's the purpose of trading? Is to make money. So why then are we learning about the trading without including the factor that influences the money that we should get, which is time? So that's just the introduction of the time zone trading strategy. So here I'm just reading the introduction in our book. That's what you see here, that just explains the time even in more. So if we just look at the first paragraph here, the first paragraph, forex trading doesn't just exist in the present moment, it stretches across time zones. So there is what is also known as time zones. So what are time zones? Time zones, as you can see, we have many different time zones. We have what we know as the Tokyo time zone, we have the London we have the Sydney, and also the New York. So these are the different time zones that spread across the world and that govern trading. So if you look at the market, so I'm gonna base everything based on my time zone, which is UTC +2. So I'm gonna base that on that. So every time from in the morning, from 1 until 7 a.m. It's called Asian session. So that Asian session is mostly in accordance that the market doesn't really move that much. It moves very slowly. There's not much movement. We all know that. So that's the Asian session. And then from 8 o'clock to 2 o'clock, that's when comes the London session. And then during the London session, immediately when it opens, that's when you're going to start seeing some volatility, start seeing some movement. And from 2 o'clock till 6 o'clock, that's when you're going to start seeing London session. So New York session, and that's when now volatility is high. So many people will encourage you to trade during the London session. The New York session, because that's where there is much volatility. And listen to this: all these sessions happen at a specific time. Think about that. It's always that it will never change that the time for London session, it opens at a different time. It's always consistent that every single day London session will open at 8 o'clock. And no matter what happens in the world, New York session will always open at 2 p.m. So it doesn't change. So if time is such a crucial thing that even the market obeys time, like it doesn't go beyond, it can't go beyond time. If it's time for London session, you don't say, no, I don't feel like moving, no, I don't feel like that, I can't do that. If even trading itself, those candlesticks you see obey and follow time, why then are we not trading? Why aren't we trying to understand what moves the market? I know we have so many factors that moves the market, but there's something that it can't avoid, and which is time. So why aren't we learning trading based on something that's a lot, that's taking over those candlesticks you see? So that's just that on the first paragraph. And just moving on to the second paragraph, the first correlation between time and forex is the concept of market hours. So that's the first thing we see. So just to go summarize everything here. So as we know we have something known as time frames. Every time we have the 1 minute time frame, we have the 3 minute, we have the 5 minute, we have the 15:30, we have the 45, we have the 1 hour. You know that when you trade, you have an option to choose. We have the daily, the monthly, the weekly. So already that's a hint on its own that already time is involved. Learn about time. So there's so many hints that are busy telling you, learn about time, understand time. Because everything that you see, the core of everything that you see is time. So each and every market, whatever you're trading, it will always have time frames. Always. So that's that. And then if I continue with it, the instance, the overlap of London and New York trading hours when there's a highlighted trading activity, because these are two most significant hubs. Yeah, that's what I was saying, that the London and the New York session are one of the most things that move the market. They always happen at a specific time. So let me continue to this paragraph here. Furthermore, time plays a crucial role in the release of economic data. So I'm just going to end it there and just summarize everything again. So we know that in the economy, we're going to face a lot of news that are going to come out. And every time when they come out, they affect the market very, very volatile. You see a lot of volatility once they come out. And one of the things that is well known is NFP. So in my time zone, UTC +2 in Johannesburg, it always happens at 2:30. So no matter what's happening, immediately at 2:30, volatility is gonna start. Every single time. I don't care if it's raining outside. I don't care if you're not feeling like trading. I don't care if your laptop is off. I don't care if you say I don't have data. I don't care whatever is happening in the world. As long as it's 2:30, you're gonna see movement. It's gonna always be on time. And then if it's an appropriate time for that to happen, it's always going to happen no matter what at 2:30. And there's many news. There's also CPI, there's always PMI, there's also FOMC. There's many news that come out, and no matter what happens, the market is always gonna follow it at that specific time. So now, just with this understanding, knowing how time plays a crucial role in it, it's very important to know that there's also a time to sell. A good time to sell, and there's also a good time to buy.
Apple's up more than 6% right now. Google about 3%, but Dell, Intel, Research Motion, and Microsoft are all to the upside. Look how strong.
Not just 400 points higher. The S&P, the market's 4 higher last 20 minutes of trading as almost everybody once again today.
Most of the techs this morning, if not all of them, have just exploded. Down 1.7% here, a loss of 37 points or so. Apple shares were just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Because the market follows time. Everything that you see in the market happen at a specific time. So if you start to understand trading in such a way that I want to know what time it's gonna do this, because as we can see, it follows time. It does. It never goes and says, I'm gonna start a bit late. It's always on time. The market, every candlestick is always on time. If you go and check each and every candlestick, you're gonna see you're always on time. It's like this one is a 1 hour one. There's never a confusion, and it always like follows time so precisely. So coming now to this almost last paragraph, then there's a concept of time frames in forex trading. Traders employ various time frames from 1 minute, monthly to another color currency price movement. So this one I've already mentioned it, so I'm gonna skip it, just coming to the next one. But beyond tangible interactions, there is more philosophical link between forex and time. Every trader, whether they acknowledge it or not, grapples with the concept of time. How long should one hold a position? So as I said, there is a specific time to buy and a specific time to sell. But guess what? There's also a specific time to exit. So what you're gonna learn here, you're gonna learn the best time to enter at the right time. As much as there is an M formation that forms, there is a specific time to enter, and there's always gonna be a time to end. If you go to your chart and you check what time was it that it started selling, there is a time. It shows you it sold at 15:30. It sold at 2 o'clock. It sold at 1 o'clock. It sold at 6 o'clock. There's always gonna be a time there that if you go to your charts and you check, you're gonna see, wow, it sold at this time. There's always a time for a buy. There's a time for a sell. There's a time for an exit, and that's what I'm gonna be. Also, that's what you're gonna learn as you go through this. And just coming to the conclusion. In conclusion, the relationship between time and forex trading is a multifaceted and profound. Whether it's a tangible impact of the market hours and economic data release or more. Okay, I won't read everything, just a passive backdrop. It's an active participant influencing and being influenced by the markets. Okay, the book aims to delve deeper into the intrinsic relationship. Okay, I won't explain much on that. So that's what the aim of the book is. The aim is to go deeper and deeper. So I want to go in with the so that you have that understanding of how time and the market just go together in relation. So that's the introduction. So I won't mention the chapters of what we're gonna cover, but already you can see here the next chapter that you're gonna cover is days, weeks. So we're gonna cover the daily cycles, the weekly cycles, so that you can catch the big moves. So you can know the exact day they're gonna happen, the exact hour, the exact minute, the exact week, the exact month. You'll be able to know just by going through all the chapters. You'll know on the 3rd of October, I'm expecting a big sell and I'm gonna exit on the 13th of October at 3 o'clock. So analyzing to a point that you're precise in your trading. So you're gonna learn how to be precise. It's not gonna only be about, oh, I'm gonna sell. When? Oh, when it reaches, when will it reach there? Now you will know, so that you can also open your phone, set an alarm. You're gonna have your calendar where you write, I'm gonna buy on the 4th of October at 3 o'clock. I'm gonna exit on the 15th of October at 2 o'clock. And you're gonna see that the market indeed does follow time. The formations you see, the patterns you see, they're just hidden just by time. So today you saw something that's just gonna be mind blowing as you do all the chapters. Yes, and thank you for watching. Thank you for listening. I hope this has been an impactful session that's gonna change your trading forever and ever, and it's gonna make it also easy in analyzing the market, and increase also your confidence, so that now you trust your trades. When you enter with confidence. You set your SL with confidence, your TP with confidence, and you hold it knowing I'm confident it's gonna go my direction. Yes, thank you very much. Keep trading, and yeah. And then if you have any questions, lastly, if you have any questions you want to speak to me directly, if you go to our website, or you can just send me an email, or that you want a consultation, all those stuff, and then I'll speak to you. Yes, thank you.